Looking to build credit without risking debt or fees? Discover how Chime's Credit Builder transforms your everyday spending into a powerful tool for crafting a strong financial history. Hello everyone, welcome back to our channel. In today's video, I'm going to read out this article by Chime itself, which is how to build credit and boost your credit score. So here in this nutshell, they have said what their Credit Builder Secure Visa offers to you. So it builds credit safely. Next, no credit check to apply, so which is great. You don't have to worry about your credit score at all for this, and there's no annual fees, and lastly, no interest. And I think that's a great deal. Now here they say how to build credit with a credit card. One of the best way to build credit is with a credit card. It might sound counterintuitive, but responsible use of a credit card can give your credit score a huge boost. And here's how to do it. Get a secure credit card. Next is to become an authorized user. And next, consider a student credit card and then request a higher credit limit. So, get a secure credit card. A secure credit card is a smart place to start if you're building credit from scratch. So, and once you open your opening deposit, you can use your secure credit card just like a regular card. Use it to pay for everyday purchases like groceries, gas, or utility bills, and pay off the balance each month. Doing this consistently can help you to build a positive credit history. And next is to become an authorized user. Another way is to use a credit card to build a credit is to ask a friend or family with a strong credit history to add you to their account as an authorized user. So as an authorized user, you can make purchases with their card as your own and have the account's payment activity appear on your credit report. And the next step is consider a student credit card. So if you're a college student, consider applying for a student credit card because this type of card doesn't typically require a deposit like secure credit card. So which is helpful if you don't have enough for a deposit. And here it's also say that they offer like rewards or cashback which can help you to cover everyday expense in college. Lastly, request a higher credit limit. So if you already have a credit card and have been using it responsibly, consider asking for the issuer for the credit limit increase. A higher credit limit can decrease your overall credit utilization and boost your score. And here they also tell you how you can increase your credit limit as well. So go ahead, you can read out their article as well. Now here's another way to build a credit without a credit card. So using a credit card isn't the only way to build credit. Here are some alternate options to boost your credit score. First is to get a credit builder loan. Next is use a cosigner. Lastly, report rent or utility payments. And next, or the last, monitor your credit report. Now I'm going to read from each of the title a few sentences. So let's say get a credit builder loan. So credit builder loan is a great way to increase your credit score. If you have a credit limit, no credit or limited credit history, you wouldn't need proof of good credit to be approved. You'll just need to ensure that you can afford to make the monthly payments. Okay. Now the lender reports your monthly payment to the credit bureaus and your credit score should increase as long as you keep up with your payments. Now last is use a cosigner. A bad credit score or no credit history can make it hard to get a loan or rent an apartment. So a cosigner is someone with a good credit score who vouchers for you and promise to take over payment if you default. And if you use a cosigner, remember that your financial behavior also affects them. So if you fail to pay your loan, the cosigner credit score and your can both take a hit. Next is report rent and utility payment. If you lack credit history but always pay your rent and utility bills on time, consider using a rent reporting services to add the information to your credit report. By linking your account, you can add on-time payments for rent, phones, and utility bill to your credit report, making it easy for new credit builders to build a positive payment history. And here are the last one, which is monitor your credit report. Monitoring your credit report lets you spot potential errors so you can dispute them quickly before they affect your credit score. So every year, you can request a free copy of your credit report from three reports bureau, which is Experian, Equifax, and TransUnion, through their annual creditreport.com. And you may also be able to check your credit score more frequently through your bank or a credit reporting service like Experience or MyPico. In addition to disputing errors, pay off any debt sent to collection as soon as possible. Now here are some 5 factors that affect your credit score as well. Knowing the top factors that impact your credit score empowers you towards the boosting yours. And here's what you need to know. So the factors is like payment history, which takes it 35%, amounts owed, which is 30%, length of the credit history, which is 50%, credit mix, which is 10%, and new credit, which is like 10% as well. Now, with the payment history, which is 35%, your payment history has the most significant effect on your credit score. So if you constantly pay bills on time, your credit score will increase. Conversely, your credit score will drop if you often miss or make the late payment. So scheduling automatic payments or adding payments reminder to your calendar can help you to ensure you to pay your bills on time and don't negatively affect your credit. Now the next is amount owed 30%. So the amount you own compared to your total credit limit has the second largest effect on your credit score. Now keep your credit utilization, the amount you owe divided by your total available credit, below 30%. For example, like if you have $10,000 available credit across several credit cards, line of credits, and you shouldn't use more than $3,000. Now next is length of a credit history, which is 50%. The most influential factor on your credit score is the length of your credit history. The length is calculated using the age of your newest and the oldest account, the average age of all your accounts, and the length of the time since you opened your last account. The longer your credit history, the better your credit score will be. So, preserve the age of your credit by keeping all accounts open, even if you're not actively using them. Additionally, avoid opening new accounts too often, as this will decrease the average age of your accounts. Next is credit mix 10%. So there are two main types of credit, which is revolving credit and installment loans. Revolving credits includes credit card and the other lines of credit, while installment loans include mortgage, auto loans, and student loans. So having a healthy mix of both can boost your credit score as well. If you only have a credit card and consider taking out a loan to improve your credit mix, while this factor might not significantly impact your credit score, it can help to push it from fair to good if you are a few points below the next range. And last one is next credit 10%. So finally, new credit can affect your credit score. Credit Bureau says new credit application as risky financial behavior. Mainly, if you apply for several loans or line of credit quickly, avoid applying for new credit unless you really need to limit credit inquiries. So how long does it take to build credit? So building credit doesn't happen overnight. It can take several months or more depending on your financial habits. However, with consistency and dedication, you should start seeing changes to your score in 30 to 45 days. And the time it takes to build a credit also depends on your starting point. If you're starting from scratch with no credit history, expect it to take at least 6 months to reach a good score. But if you're working on a repairing or damaged score, it might take a few months to a couple of years to start seeing a real change. And you can also build credit faster by using a secure credit card versus an unsecure one. So, taking out a credit builder loan, making monthly on-time payments. However, there is no quick trick to getting and keeping a good credit score. Instead, you will need to be consistent with your good financial behavior or risk your score dropping again. And that's it. I hope you found your answer right here in this article. If this video helped you out, then like this video, comment down below, subscribe to this channel, and thanks for watching.